Ladies and gentlemen, Greg McCloskey from ForexLive.com. This is a Forex quick look on to take a look at the dollar versus Canada from a technical perspective. Today's date is February 8th, 2024. Let's get started. Looking at the hourly chart for this currency pair, and in trading yesterday, I was pointing out in the video how the price had been able to hold below the 200-day moving average, staying below that 200-day moving average, keep the bias more to the downside. Indeed, toward the close, the price fell below the 100, and then even dipped below the 100 or the 100 bar moving average on the 4-hour chart. That's this blue line right here. In the Asian session, the momentum to the downside continued, and we headed down toward the next key target, which was the 200-hour moving average. That's a green line in this chart, and that's where the party ended. The selling ended. The price started to hold against that level. We moved a little bit higher, came back down to test the level, and that was the key for traders to retest that 200-hour moving average, and we couldn't get below it. And once we couldn't get below it, the sellers turned to buyers, and we started to rotate back to the upside. That move to the upside got back above the 100 bar moving average on the 4-hour chart. It also got above the 200-day moving average at 1.34727, or is that 77? 77 looks like, and the rising 100-hour moving average as well. But once we got above that level, these high prices started to come into play. It was just the high prices from yesterday and toward the close on Tuesday's trade. And we found the willing sellers against that level, pushing the price back below the 100-hour moving average and the 200-day moving average in the process. And lo and behold, it's been a rotation back to the downside. We're currently back down, testing the 100-bar moving average on the 4-hour chart. So we're in between this, cluster of moving averages, including the 200-hour moving average, 100-bar moving average on the 4-hour chart, the 200-day moving average, and the 100-hour moving average on the top side. I would say that the 200-day moving average of all those is probably the most important, as long as the price can remain below that 200-day moving average. Now, the buyers had their shot. We would the bias would be more to the downside for that pair. So watch that level 1.3477. If the price goes above that level, all bets are off, and the bias control tilts more to the upside. Get below the 100-bar moving average of the 4-hour chart, and then we look back down toward the 200-hour moving average. We did have two tests of that moving average in trading here today. Couldn't get below it, so getting below that level right here would be a key break going forward for the dollar versus Canada. So there you have it, a technical look at the dollar versus Canada. My name is Greg McCloskey for ForexLive.com. Good fortune with your trading. Bye-bye now.